Welcome to the Contrarian Capitalist podcast. I'm delighted to be joined today by returning guest Ted J. Butler. Ted is an independent analyst and sound money advocate, also a co-writer at the Sound Money Report over at Substack. I highly recommend you give that a subscribe. Ted, welcome back to the Contrarian Capitalist.
Thank you, Rob. Great to be back and looking forward to talking with you again today.
Yes, really looking forward to this. It's amazing that the last time we spoke, which was in and around August 2025, that silver was around about the $40 mark, and everyone was very excited. And we're sat here today on Friday, the 16th of January 2026, and we're just over $90. So, very good times to say the least. Plenty to talk about today, but I wanted to start by going into your field work that you do, if you don't mind me saying, because you spent a lot of time on the road recently in the last 5 or 6 weeks. So really, it was just to dive into, where have you been, what have you seen, and I will say that for any companies that you mentioned, these aren't financial recommendations. These are just literally where you have been in the last 6 or 7 weeks. So yeah, Ted, start off wherever you want.
Sure. Well, originally I came out to Latin America, to Colombia, to visit Outcrop Silver. That was over a year ago now, and ended up staying in Latin America. And in recent weeks, I've been to Mexico to see two companies: one Kootenay Silver in Chihuahua, and the other one Minaurum Silver, who they've now been renamed themselves to. And that was a great experience. Really great companies, both working towards expanding their resources. And then a couple of weeks later after that, I went to the Salta region of Argentina, which is really experiencing somewhat of a boom right now in light of Milei's broader pro-business policies, such as the Rigi Act, which provides incentives for investments over $200 million, essentially providing tax breaks and currency incentives and things like that. And so I went to see Abra Silver, their flagship Diablillos project, and I went to see Argenta Silver and their flagship El Cavar project. Both companies at two different stages. One is kind of quickly advancing almost towards production. It's not really close to production, but it's maybe a year or 18 months away with Abra Silver. And the other one, Argenta, has just basically had its first birthday. So two different stages, but all nonetheless very, very interesting. I think Argenta have got a resource around 50 million ounces combined, inferred and indicated from the previous company that operated there, and they're essentially undergoing a very extensive drill program to grow that resource. The resource itself is, I think, 3% of the entire land mass of the broader property that they've got there. And so there's a lot of upside potential. Abra, on the other hand, is already has an exceptionally big resource, around 350 million silver equivalent ounces. And they just announced recently, yesterday, as we cover in Silver Advisor with Peter Kraut, that they're going to be embarking on another 15,000 meter drill program to add to that resource. And the exciting thing about Abra for me was the fact that potentially there is a porphyry underneath that oxide resource, and that adds a whole another layer of upside to what is already a massive story. Um, so definitely interested in Argentina. Coming back to Mexico briefly, I think what I will say politically, I know there are a few people concerned about the backdrop there with the president, but what I do believe is that there has been an improvement with Scheinbaum as opposed to AMLO, who was a lot more um, extreme and also a bit more hardline with his kind of attitudes to mining. So I think we've seen that reflected in the political risk in Mexico. I think it's improved since AMLO's come in, since Scheinbaum's come in, and I think we're starting to see now a bit more of um, an attitude shift whereby you see in permits. I think Silver Tiger was a company that just recently received a permit for an open pit mine that it's building in Sonora, I think it is. So things are changing, and not every jurisdiction is equal, but nonetheless, great experience for me to be boots on the ground and see those companies in person.
Well, 100%. I must admit, there's a couple of companies there that you've named that I've got a couple of bits of interest in, to say the least. Those that follow me know which ones they are. And I definitely agree with Scheinbaum as well. I do think that attitude being here in Mexico, I should point out for those that aren't familiar, I am based here. Yes, that attitude seems to have changed. It seems to be uh, a little bit more liberated, shall we say. Uh, Ted, what's the as I said, as I mentioned at the start, when we spoke last time about $40 silver, it's about $90 now. So again, from all your field work, what has the attitude been towards that silver price? Because even at $40, most, if not all of these companies are going to be profitable. And, I'm sure some of their results are going to be fantastic moving forwards. But where we are now, I mean, it's effectively printing cash, I imagine, for a lot of these companies. Is that the feeling you get from being in the field speaking to these people?
Sure. Well, when I visited Mexico, I think silver was just over $50. So we hadn't quite, this was probably back in October, November. So we hadn't quite reached those lofty heights. But at the same time, like you say, it completely transforms the margins of these companies to arguably some of the best margins in the world. I mean, like, think about like oil companies, Visa, MasterCard. These guys have like, more than 50% margins. But now we're talking like 80% margins at like an all-in sustaining cost of, 20, $25 a $90 silver price. And that's the thing, Robert. I think these companies know that they don't need the price to stay above $90 for to be profitable. They just need it to stay above 40. And from my perspective, I don't see the potential correction in the silver price being as pronounced as that. I actually think that there will be some kind of correction, no doubt. A bull market does not go up in a straight line, and we've already seen that in recent months. I think back in November, I think, or late last year, we had before the rise over Christmas, we had a big correction around 7 8%. And I think we're going to see more of that. We're going to see more volatility. But we have to realize now that silver is not the undervalued asset it once was. It's now fairly valued, right? If you look at the gold silver ratio, going back to 1900, it averaged about 50. We're now there. We're now at 50, 50 gold silver ratio. So what that means is that this is not the end of the silver bull market, because I actually do think that the silver price will go on further, and the gold silver ratio will go to more extended levels like it did in 1980 and 2011 when it went down to 30 and ultimately 15 in 1980.
Hmm.
So there's still a propensity for silver to rise and go from fairly valued to overvalued, which I believe will happen. But on the way, there's going to be a lot of correction. There's going to be a lot of volatility, and ultimately, my belief is the best way to play this now is to invest in silver stocks, the mining companies who are leveraged to the silver price, who haven't incubated this $90 price, and actually they're probably trading at probably they've gone up 200% in the last 12 months. In bull markets of the past, they've gone up 1,000%. Even the juniors like 1,500% if you look at like the extended bull markets from 2001, 2008, 2009, or whatever, or even a little bit after that. Um, so my point is, Rob, is that there's a lot much further to go. The best way to play this is with a still.
Yeah, I think that's a sentiment I would agree with. I was thinking this the other day, how much more upside has silver got? And I know that you mentioned Peter Kraut there as well. I know that he, in his book, has mentioned $300 silver. He's outlined why that's the case, and I really like that, analysis that he's done. So I do think it's got a lot of more room to run. But as
Yeah,
you said, if we keep the numbers simple, for argument's sake, let's just say $100 silver, and let's just say it does get to 300. Well, that's a threefold increase. But going to those mining stocks, there's a hell of a lot more potential there. So I do agree with your sentiment there, Ted, about where it could be best to play this in order to maximize potential, returns moving forward.
sure. Yeah, and I think also key to that is choosing the jurisdictions, right? There's not every jurisdiction is made equal. If you go to Africa, you're going to find a lot of different quality of attitudes to mining, regulatory environment, and just generally, corruption and bureaucracy. So you have to really be selective about where is the best jurisdiction, and And for me, I'm being based in Latin America. I've got kind of a good handle on that.
Mhm.
There's been a real rightward shift in Latin America in the recent years. Now, this has kind of come on the back of Trump's election and kind of getting everybody in line in Latin America to align with his interests. I mean, prior to that, China was and still is the number one trade partner for most of Latin America, with the US having been that in 2000, right? So in 2 decades, it's totally shifted. But what we've seen in recent months, even, is you've had Milei elected in Argentina and then backed by Trump to essentially help him to win his midterms after facing waning support in Buenos Aires until Trump kind of announced that 20 billion help package and the currency swap agreement. So Milei, right wing. Bolivia recently changed. They've got
Mhm.
elected a centre-right president after 20 plus years of a socialist government. Now, Bolivia's got some great geology. It's really, I think it's the fourth largest producing silver country in the world, or maybe the fifth largest, but it has the potential to rise a lot more than that, right? So Bolivia is now on my radar now as one to watch. Chile as well, where I was when in December. I think that is a really interesting jurisdiction as well. I think it's round about the same as Bolivia, and they've just elected a right-wing president in Cast after 4 years of a left-wing president in Boric. Um, so you're seeing a lot of Latin America shift rightward and become more pro-mining, and that's really optimistic for me, especially with these a lot of these jurisdictions being big silver jurisdictions. And just one more thing as well, if we think about the elections for 2026, we've got Colombia elections. Now that's not so much of a silver jurisdiction, but it's got a lot of good gold plays in Colombia. And there is one silver in Outcrop Silver that's a great one to note, but they've got an election and that could really transform their political outlook going into 2026. So Latin America is an amazing jurisdiction in general for geology. But what I'm really reassured by is now politically it's becoming more aligned with Western values, and that's a really great sign for investing in mining stocks there.
Yes, I'm thinking the irony of all of them potentially shifting over to the right hand side would be it would just be everyone's luck, dare I say, that the US itself would swing back to the left because I think that's going to happen actually later on in the year. I don't want it to happen, but I do think it will happen. I think that the Senate and the House is actually going to go back to the left. Anyway, geopolitics or US politics aside, Ted. You mentioned off air, and you happen to be in and around the region of Venezuela, and of course that's a lot of impact going on there. So while we're on the theme of South American politics, again, you were in and around the area. So what was the feedback on the ground there? But also, does Venezuela, obviously everyone I think knows about the oil situation, but is there a lot of potential mining exposure in Venezuela as well?
Yeah, I think Venezuela is obviously a massive treasure trove of minerals, and resource wars are often the reasons why wars even happen in the first place, and that's really what's been happening here. I think obviously Trump's been honest about it. He said that, this is really a move to secure our oil, probably in the wake of, declining output in the shale and the Permian Basin and kind of the future of that production facility. And he's actually kind of looking to shore up America's energy future. I think it's a lot more broader than that, right?
Mhm.
It's not a coincidence that Chinese officials were in Venezuela 3 hours before the attack that the US military initiated. I think it was around 10 p.m. that the Chinese uh, arrived to talk with Maduro, and I believe it was to secure some kind of um, deal to buy the oil in Chinese yen, right? And that totally threatens the structural integrity of the petrodollar agreement that
Mhm.
Kissinger originally forged back in the 70s, right? This was not a move just to secure oil. This was a move to protect the dollar, right? This was a move to actually insulate the biggest oil producer in the world, the biggest country, the country with the biggest oil reserves in the world, 300 billion barrels. This was a decision to say, we don't want that being priced in China's currency. We want that to be priced in US dollars because if we don't, then we risk that the BRICS will regain the ascendancy and continue to gain momentum. So that's just an important thing to note. This is not what Trump's been framing it as initially as some kind of war on drugs. That is the facade. That's a smokescreen for something a lot deeper.
Mm.
And I think what's interesting to me is that this is kind of the Donroe Doctrine. This is a continuation of really what's been a major theme of US policy going back to the early 1800s with the Monroe Doctrine. And it totally differs to China's approach, which is this idea of soft power diplomacy, which is where they go into the Latin American countries, invest in the infrastructure, buy the loyalty essentially of these Latin American countries to access the resources. Trump's strategy is different. It's kind of just we want the resources, we're going to go and get them, and we are entitled to them in the name of protecting our hemisphere. That's a totally different view. Both have varying degrees of success, but let's not lie about this. Let's not be naive to this and think that this is a war on drugs. This is purely a resource war and a desire to protect the US dollar's exorbitant privilege of being the global reserve currency.
Yes, 100%. And we can put Greenland into that
Oh yeah.
conversation as well. And I was saying to the other day, I think all of this is part of creating a bricks for the Americas, basically. And I just urge people to have a very quick, basic look at a globe and have a look where, of course, the USA is. Look at its neighbours. Look at Central America. Look at South America, which we've just touched upon as well. And then just look where Greenland is. And yes, from a common sense point of view, and I'm not advocating for it, and we could agree to disagree, like all the listeners could agree to disagree on this all day long. From a common sense commodity point of view, actually what is going on with regards to Greenland, to me just makes sense. I'm not advocating for it. I'm not Danish. I'm not, from Greenland or anything like that. It's probably a different story there. But yeah, just look at a map, look at everything else, and that still doesn't stop Canada and China from doing their own resource agreement. So I saw that overnight that they've agreed a new tariff agreement. Again, Canada is a country with a lot of natural resources. Anyway, me waffling on, Ted, I should go back to you mentioned about jurisdictional risk as well. So we've got a lot of countries that we can look at. You mentioned Mexico as well with the change of president. So in terms of jurisdiction risk, what other things are on your radar? What should potential people be looking out for if they're looking at mining stocks, and what jurisdictions should they be looking at?
Sure, well, we can come back to Mexico. I think that's the biggest one for silver, definitely by a mile. You got like 185 million ounces of production there annually in 2024. That's like 75 million ounces more than second place silver producing China. Um, and for me, Mexico has to be on the list if you're looking at silver. You just have to be careful about looking for the track record of the management, looking at the specific provinces within Mexico, the states of you know is there crime near there? Is there good infrastructure? Are there other companies operating near there, right? You've got to kind of look for the hallmarks of a successful company, right? Have this management team had a successful buyout in the past? How long have they been doing this? You just kind of got to be a good judge of people because that's really what this is ultimately. This industry is. It's people,
Hmm.
and then beyond that, you have to look at the geology. And now some of the grades that a year ago may have not been economical are absolutely lucrative right now because we've seen the silver price triple. Um, but just coming back to the jurisdiction of Mexico itself, I do think that there is a material improvement now with Scheinbaum because we've seen this in the Fraser Institute. I think they release an investment attractiveness index every year. And under AMLO, I think in 2023, Mexico's score was 36 or something out of 100. With Scheinbaum, it's now 54. So admittedly, it's not like, you know, Nevada or British Columbia, but it's not as bad as people make out. And you can't scratch it off your list when you're looking at silver companies because 25% of global production comes from Mexico, right?
Hmm.
There are some comments from that I've read from the Mexican mining chamber. I think it's Pedro Gonzalez, and he said that they're making progress issuing permits, and that there's been an open conversation, and that the conversations with Scheinbaum have been productive. Now that's just one perspective, right? But it's very possible that with the Silver Tiger permit, that could be the first of many in Mexico, and ultimately Scheinbaum's got to wake up and smell the coffee because Mexico's economy is largely dependent on natural resources and mining. So if you want to shut that out in the name of environmentalism and you want to hypocritically limit silver production when silver itself is being used to advance the green energy transition, that's
Mm.
your call. But really, you should be opening the doors to mining. And I think what we're starting to see in Mexico now is an improvement on that. And hopefully, we can see some more clarity into the same level we've been seeing in Argentina, with Milei, where there's actual, regimes that incentivize investment into Mexico.
Yes, it's just one of those like reverse psychological things, isn't it? Where people, want to be able to, let's protect the environment and do this and do that. And that's fine if people want to believe that, that's great. But ultimately, if we go through this major transition, which is going to need a lot of silver, a lot of copper and so forth, in order to produce more, I don't know, various fuel and, that's going to be greener and cleaner for the environment, then it's a case of one step back to take two steps forward. And I think you've hit the nail on the head there, Ted, as well. It all revolves around, I want to say money, but let's call it fiat currency, of course, because it's not exactly a great store of value at the moment. Uh, Swing back to Argentina then, if you can, and I think that that's a great comparison to make because, as you mentioned, with Malay coming in, that opened a lot of eyes for a lot of people, and they went, "Oh, hang on a minute, this should be a good place now." You've obviously given some positive reviews about places that you've been to in the Salta region. Uh, it's Salta, isn't it? Yeah.
Yeah, yeah,
And
yeah.
I was thinking of Salto in Uruguay. I think that's a place in Uruguay. So I was making
It
sure I
is.
got
Yeah,
that correct.
yeah, yeah.
Um, so it's interesting to see that shift in mentality down in Argentina because it seems to be the right, dare I say, the right person in charge of the country who's got a vision of what they want to achieve. So it just seems that if you've got that, it really can help business within that country.
Absolutely, and the Rigi Act has been really key to that. I mean, we've had, I think, Rio Tinto have already had their application accepted for one of their lithium-based projects in Salta, um, and at the same time, I think Abra Silver have just applied for their Rigi Act, and they're expecting the acceptance of that application early this year. So what it actually does, just to be clear, is it provides companies with an incentive to get things done more quickly because it
Mhm.
essentially condenses the timescale down during which you receive the benefits from the scheme. So you have 12 months initially to deploy $40 million, and then you must invest a further 40 million again in the next 12 months. And during that time, the company's cash flows benefit tremendously from VAT relief via these tax credit certificates, um, which allow essentially the full tax on the bank credits and debits to be used against income tax. And then at the same time, you've got the inherent FX flexibility of it, which allows exporters to progressively retain their dollars offshore and ultimately achieve full autonomy over foreign assets, capital inflows, and ultimately profit repatriation. Um, so, like I said, this is something that I wish more companies would do. Millet is not a saint. There's definitely some kind
Mhm.
of history there that probably best that I don't get into. There's currently a bit of a scandal in Argentina whereby allegedly there are allegedly people burning the forests in the Patagonia, and some of these people supposedly are Jews, and Millet is of course of the Jewish faith. Now I'm not going to get into that because it's better that I don't. But it's
Mhm.
my point is that these things can easily flip on their head, right? Latin America, you have to be wary. As much as this is an excellent regime from Milei, you have to be wary that Argentina is a very volatile country with a very volatile history, and things do change quite quickly. Just to be just to be totally fully transparent on that. I'm not saying it's going to result from the current Patagonia burning situation, and I do think that Milei will actually get another term, right? If you would ask, put a gun to my head and ask me. But I do think that we just have to be wary that there are risks involved with investing in these companies. But in my opinion, the rewards to be gained from, stomaching the risks are astronomical and totally outweigh any risks that are there. So important to be diversified, of course, and I think it's important also to have some North American companies as well. Talking about like solid jurisdictions like Nevada, Australia. I'm talking about certain areas of Canada, and ultimately to have a diversified portfolio. That's the way you mitigate the risks in the natural resource industry, and yeah, you'd be stupid not to.
Well, let's go back to the overarching point that you mentioned earlier on about your thoughts with regards to silver being relatively fairly valued at the time of recording. So if that's the case and people wanted to, dare I say, jump on the bandwagon or profit more from what's going on and what's likely to happen, then yes, the mining stocks are going to be the answer. That doesn't mean that every mining stock is going to be the answer. As you've highlighted, you need that jurisdiction. You need to understand the risks. You need to understand also, yeah, have an idea of where you think silver and actually gold to an extent is going to go moving forwards. Understand the bigger picture with regards to commodities. And then you've also highlighted people and management. Absolutely crucial that you have those things as well. Otherwise, you could have the best project in the world, but if you've got the worst management, that's really not going to help you at all.
Totally, totally, and yeah, I think the structural reasons behind the bull market for silver haven't completely changed yet. We're still in an era where there are supply deficits, right? And
Mm.
this will take time to incubate. The production for silver is not just going to come online suddenly now that we're at $90 silver. Like I said to you last time, the damage has already been done by the fact that we've had these 5 years of supply deficits and ultimately, production of a silver mine, inception to production takes 10 to 15 years. And then you add to that 30% of actual global silver production each year that comes from primary silver mines, but the other
Mm.
70% comes from lead, zinc, copper, gold mines as a byproduct. So it's not like higher silver prices incentivize a copper mine necessarily to produce more silver, right? So this idea that the silver bull market is over is a fallacy. It's not true. But we do need to be wary that we're now at a different point in the bull market. We're not at these bargain basement prices from 1 year ago. Silver is now, in my opinion, more fairly valued than undervalued, but it's still not overvalued. And I think that's the next leg up is where ultimately public participation and as we're already seeing in the media now, silver's getting more attention.
Mm.
That probably drives silver to 150, $200. That's really ultimately where I see this ending for silver. That's where I see the blow off top. And you see some people like TD Securities shorting silver now, expecting it to go down to $40. Um, I'm not in agreement with that. I think it's actually too soon. I think there is a lot more speculation that's going to drive silver further. That's going to hurt these shorts really, really damaging, really, really damage them. Um, so yeah, ultimately, I think that the silver bull market's got more legs, and but I remain in that position, Rob, that the silver stocks have way more further to go than silver itself.
Yes, it's something that I would agree with on that. I'll probably get killed for not asking about a time frame because everyone's, you could say, well, we've got $200 here or $300 there. Again, from your experience in your head, do you have an idea of when you would think if it were to get to $200 as you just highlighted? Are we thinking 2029, maybe in the next 5 or 10 years, or do you think next year? What time frame have you got in your head, Ted?
Yeah, well, it's funny. When I was in London at the Resourcing Tomorrow conference back in December 2024, I got asked the same question. Where do you think silver's going to be by the end of 2025? And back then I said, I think it's going to be at $50, right? And to be clear, that kind of got a lot of funny looks. A lot of like, is this guy crazy? Does he really think? I mean, it was crazy to even say $50 back then.
Mhm.
Now, actually, now I look conservative with that estimate because we were, 80, $90 by the end of 2025. And going into 2026, I'm kind of th I'm silver is higher than I expected it would be right now, right? Um, I do think if you ask me where silver's going to be by the end of the year, I do think it's going to be a lot closer to $150. I think it's going to be a very volatile uh, run, and it's going to maybe even correct quite considerably, like 20-30%. That wouldn't be something that would surprise me, but I think it will get bought. I think people will realize that the supply is not going to come online definitely from these mine production. The thing we need to be wary of, and the thing that we need to consider as the bearish case for silver is if supply comes online from recycling, right?
Mhm.
If the all of this industrial silver demand, if the incentive becomes sufficient to actually recycle it from the solar panels, recycle it from the batteries, and in my opinion, we're not there. We might be there yet, but I think we need to cross $100 for that really to be incentivized. Um, and also, the idea that, industrial demand's going to somehow fall off a cliff. I don't think we're there yet either. We're not at the threshold where substituting copper into solar panels makes sense yet, because in my understanding, the break-even point for these to use silver in the solar panels is around $134. That's the point where any more than $134, it starts to be unprofitable to be using silver in the solar panels. We're not there yet, right? So there's still a smaller profit, albeit being made by these companies, but the benefits and the unrivaled conductivity of silver is still worth stomaching the cost for, as opposed to adding substituting in copper. So there will come a point where silver does decline, but I do believe that we're going to be somewhere close to $150 by this time next year, and during that time, the mining companies will probably double or triple the performance of silver, in my opinion.
And we should point out again, none of this is a financial recommendation, of course. This is for educational purposes only. And it's fair to say that for people that are listening that are thinking, oh, have I missed out or anything like that? No, absolutely not. But you must do your own homework with regards to the mining companies. You must follow people like Ted. You must follow, the contrarian capitalists. You must always do your own homework. And even if you want to go out and buy physical silver, if you can get your hands on it and the premiums aren't too high, it's still not too late to do that. This is still it's getting a bit more news, it's getting a bit more traction. But you can still go out and do that. It's probably a good thing to get out of that fiat currency system into sound money. To be perfectly honest, but again, that's not a financial recommendation. It's just highlighting that yes, there's a lot of buoyancy, but there's also a lot of room to run moving forwards. And Ted, go ahead.
No, no, sorry, Rob. It just you made me think of a question there. It's like, if you're going to sell the silver, what would you actually put it into at this point? That's a really important question for me. It's like, is there anything better? Is there anything more undervalued at this point? And probably there are. People are certainly interested in oil right now as like a contrarian play. And I do like that idea, and I have been sort of siphoning some of the, top end gains into the big players like Exxon, Chevron, Shell, and I think that actually does have a lot of merit as a strategy to diversify out of your maybe riskier silver plays. But I do think that. And what do you think, Rob? What are you going to be diversifying into, like going into the long term? I'm curious.
It's very similar, actually, Ted. So I created a watch list of oil stocks actually a couple of weeks ago. There's only about 11 on there, but I've started with the exact same companies that you've just mentioned there, Exxon, because I know Rick Rule's a big fan of Exxon as well, and you know, that's normally a good sign if someone like that
Oh
is
yeah.
paying attention to it. So for me, I am just I'm letting the current portfolio run a little bit, and then at some point. I imagine in Q1, yeah, maybe Q2, I'll take the profits off, well, I'll take the initial investment off the table, and then I will more than likely look to go into oil stocks. I still think oil's got a lot of room to run, and I'm very bullish from a long-term perspective. I still think there's a lot of shenanigans to play out this year. Obviously, midterms, who wants what, what's going on in the background. So when people aren't looking at it, that's a very good time to do it. So I'm in a very similar boat there, Ted. It's a good question, and yes, for me, it would be that rotation from letting the winners run in the current portfolio, but then again from the initial investments cycling into oil. And I'd start with probably, as you mentioned there, the bell cow Exxon itself. That's probably where I would start when I get around to doing it.
Yeah, that's good to know. I think obviously energy is like 2.5% of the S&P, and that's really historically undervalued. So perhaps energy is the next leg up here, but just to be clear, this is not over for silver. It's just kind of you need to get your act together if you want to benefit from this now. Obviously, that's not advice, but you know, we're not at the bargain. It's not the bargain basement prices now. We are now in the eye of the storm of this bull market. It's the middle of it. There's still further upside to be gained, but now is the time to take action if you really want to benefit from this bull market in silver.
100%. And I will, without naming the name of the company, I will link to one of your LinkedIn posts. I highly recommend people go and read that about a company that you covered recently as well. Well, Ted, it's been a fantastic conversation. Always like to give people the opportunity to say how they can be found. And, you do a lot of work for a lot of different wonderful publications out there. But if people want to get in touch with you and find out more about you and your work, how do they do that?
Yeah, the best way is to go onto LinkedIn. Ted J Butler is my handle. As you said, yeah, a lot of different publications. There's the Sound Money Report on Substack, which is where you can find my sort of macro views, always covering about silver, gold, more broadly, sound money. The silver stocks themselves, I write a newsletter with Peter Kraut called The Silver Advisor, which is absolutely free and it allows you to see the companies that we're personally invested in, that we update you every day when they have news. And essentially, you can find it on the goldadvisor.com and you'll see the silver advisor. We also work with Jeff Clark. He does the gold miners, but we do the silver side. And we've got 17 companies now that we cover. Last year, when we started this, we had one company. So we've seen some incredible growth. And ultimately, I think we're still going to be seeing a lot more growth in the silver stocks that we're covering. Beyond that as well, Rob, I still continue to write for the Morgan Report, which you can access at themorganreport.com. David Morgan, I've been writing with for now last 3 years. He's been instrumental in my career, and I'm very grateful for everything that he's help me with. And ultimately, we cover everything from mining stocks to gold, silver, even tin, things like that, like natural gas, oil, platinum. We called it like $900. So if you're looking for some kind of broad-based insights into natural resource investing, mining stocks, and just geopolitics in general, morganreport.com is a great one for you to get access to. That's about it, Rob.
No, perfect, Ted. Well, as usual, I'll put all those links into the show notes that come with this podcast and video as well. So head over to contrariancapitalist.substack.com to get those full show notes. Ted, it's been a pleasure to catch up and look forward to catching up towards the end of 2026, and we'll see what the lay of the land is then.
Awesome. Thank you, Rob. Look forward to it.